everyone? How are you doing at the end of day 2? Holding up? It's a pretty
still fresh.
Well, you have 3 intense days ahead of you. It looks like.
No, only 2 more.
It's only 2 more. Oh, you're halfway there. I think there's probably no better thing you can do for your development as an entrepreneur, though, than spend this time this week immersed in the boot camp. It's really, I think the Berkeley method for entrepreneurship is incredibly effective and really a new way of learning entrepreneurship and practicing entrepreneurship. So I wish it had been available a few years ago when I was transitioning from corporate life. Maybe I would have made fewer mistakes in that transition. But so what I'll do today, we have sort of a limited amount of time, and I'll go through my presentation in about 15 minutes or so, and then Kiran is going to teleconference in from SeedInvest in New York. SeedInvest is probably the leading equity crowdfunding platform in the US, and they're powering the Berkeley Bootcamp. And what will eventually become Callnvest, which will be a platform available to alumni to actually invest real dollars in student-led ventures. So that's pretty exciting. So I want to get through my bit here so we could move on to Kiran. I'll spend just a little bit of time on my background, the background of my business partners. I don't want to spend very much time on that. And I want to go into an overview of sort of the crowdfunding landscape, the various types of crowdfunding that are now available, and their suitability to different business models, and try to give you some real-world tool to decide if this might be the right tool for your business, and if so, give you some strategies and tactics to run an effective campaign. So my name is Robert Mitchell, as you know. I'm part of a team of entrepreneurs who drafted the framework that legalized debt and equity crowdfunding in the United States. We sort of brainstormed this idea back in 2010 when Kickstarter was really gaining momentum. We were all investing in Kiva and Kickstarter, and we thought this should be available to actually invest in our friends' businesses and get equity. And it wasn't at the time. It was illegal due to laws that were in place since the Great Depression. And so over the course of a weekend, we drafted out this framework that we thought would be effective in changing the regulations to legalize equity crowdfunding. My business partners, Jason and Sherwood, who are both entrepreneurs in residence at the CET, took that and really ran with it. And they got it through the House of Representatives and the Senate. And it was folded into a larger piece of legislation called the Jobs Act, which President Obama signed in 2012. So since then, we've seen a lot of activity around it. Sites like SeedInvest is up and running. People are raising money online and actually selling equity. It's not fully in effect yet. The SEC is working on final rules for crowdfunding for normal citizens. Right now, it's only for accredited investors. So SeedInvest is accredited investors only. Since that time, we've created our company, Crowdfund Capital Advisors, and we're working sort of globally with institutions like the World Bank in helping create infrastructure in other places in the world to effectively empower entrepreneurs. And the last thing I sort of wanted to mention here was that we're entrepreneurs in residence. Jason and Sherwood are entrepreneurs in residence here and available. If you are going down the path of crowdfunding, feel free to contact us anytime, and myself, I can give you contact information afterwards. There's also a program at Berkeley called the Program for Innovation in Entrepreneurial and Social Finance. It's taken me a year to say that properly. It's essentially a crowdfunding research institute dedicated to the academic research of crowdfunding, probably the only one in the world at this point. Dr. Richard Swart is the director of that program. And there's an amazing amount of information available through that program on the Fung website, so worth checking out. So what we're starting to see now, I think Kickstarter's been in existence since 2009, debt and equity crowdfunding, or yeah, debt and equity crowdfunding for about 2 years, is it's starting to be really integrated into the capital stack. It's just another funding tool available to entrepreneurs like venture capital, angel investment, private equity, and so forth, which was something that in leading up to the passage of the Jobs Act was highly questionable and had questions. People weren't sure if that would be the case. And now increasingly entrepreneurs are choosing to go through their initial rounds of funding with crowdfunding, those seed rounds and early stage Series A rounds. And it's providing them a way of collecting market feedback and validation to really research their product and perfect their product before they go on to follow-on investment. So we did a white paper about a year ago, and we looked at several hundred companies in the US, Europe, and in parts of Africa who had gone through different types of crowdfunding, equity as well as donation and perk crowdfunding. And the results were pretty fascinating. 38% had gone on to professional investment within 3 months of their crowdfunding round. About another 40% were in talks with professional investment. So we're seeing it's providing signaling to follow on professional investment, which is fascinating. So now when you go in front of a VC or a private equity firm, instead of showing up with a business plan and an idea and a prototype, now you'll have all of those things, but customers, revenue, a market, maybe actually some profits. So it's a lot more powerful case to go on to professional investment following the crowdfunding round. Which is interesting to think about. I'm kind of looking at my notes here. Last year, there were 3,800 companies funded through venture capitalists, out of 27.5 million businesses in the United States. 3,800 got VC money. So it's extremely difficult, even here, in Silicon Valley, to get access to VC and get capital from a VC. So increasingly, this is a tool that people are going to again, get some market validation and hopefully go on to professional investment afterwards.
Rob, did you ask, I'm just curious, who's heard of crowdfunding versus equity crowdfunding?
Yeah, I'm just going there right now. Well, let's ask this question. How many of you think it's relatively easy to get funding for a business, even here? One? Good, okay.
One brave soul.
One brave soul. And you're partially right. For some businesses and some people, if it's the right business in the right niche and you can get in front of a VC, you have a pretty good chance. But they're not great. And if you're not in Silicon Valley or Boston or New York, the chances get slimmer and slimmer from there. Venture capital is very centralized. So how many of you have heard of Kickstarter? I'm assuming everybody, yeah. So are you familiar with the difference between the type of crowdfunding that exists on Kickstarter, which is donation or perk-based, and then equity? Mostly. So the difference is when Kickstarter started funding arts projects and music projects, and only recently have the use cases emerged around entrepreneurial ventures. On Kickstarter, there's no exchange of equity. You're not giving equity in your company or issuing stock. It's essentially a donation they're making to your company. You may choose to give them a perk of some kind, send them a product, an album, an app, or something in return. But because you're not issuing stock, it's a lot easier. You're not under the scrutiny of the Securities and Exchange Commission, and you can sort of function outside of that regulatory regime. With equity crowdfunding, which now exists in the United States for accredited investors and has existed in Australia for a number of years, in the UK and the Netherlands in a little bit different format. You could go online and solicit investment and actually issue stock, private stock in your company. So with the passage of the Jobs Act in 2012, it really creates a new asset class in the private capital markets.
Is that something that's applicable to the U.S. and international?
Well, yes, it is. I mean, in the markets where it exists, investing in U.S. companies gets a little bit tricky. So primarily what we're talking about here is U.S. citizens investing in U.S. companies, with some exceptions. So let's see. There are some types of businesses are well suited to crowdfunding and some aren't. Tech startups are particularly well suited because they're not capital intensive. The average crowdfunding raise is, in our study, was about $100,000, $107,000. A little bit more for equity campaigns. So it's not a lot of money. It's very early stage funding to get off the ground. So companies that are capital intensive are not going to be well suited. You're not going to build an oil refinery or develop the next great cancer drug. But it's perfect for a tech startup to get moving. And the other use case we're seeing is small Main Street businesses. These are people who really don't have access to professional capital. Banks won't lend to them. Typically, VCs and private equity is out of the question for a Main Street business. And it's really providing a new avenue for them to go out to their customers and supporters and gain investment for expansion or to get off the ground initially. There are, I'm thinking now, there are, sorry, collecting my thoughts here a minute. So before I go on to Kiran, I just wanted to sort of talk about what we're learning in terms of what's making successful campaigns. We're doing some consulting with companies and entrepreneurs going through crowdfunding campaigns. Only 43% of the companies or entrepreneurs who go to Kickstarter actually reach their target. So with Kickstarter and with the new equity crowdfunding, you have to set an amount that you're looking to raise, and you have a fixed time period to reach it. And if you don't reach your target in that period of time, you get none of it. So it's all or nothing funding. Forces entrepreneurs to be realistic in setting goals and in what they need. But again, only 43% are hitting it. And some of the reasons include not having a strong social network. Sort of one of the most important prerequisites to a crowdfunding campaign is to really build a strong social network and go out through all the channels you're familiar with: Twitter, Facebook, Google+, LinkedIn, and sort of establishing yourself as a subject matter expert in some area related to your business. Joining the relevant Google groups and LinkedIn groups, starting the relevant Google groups and LinkedIn groups to really circulate your name through social media and establish that role for yourself. Because those are the people you're going to go back out to and solicit investment from. So the biggest mistake people make is not having that strong presence, starting a crowdfunding campaign, and no one comes to the party, essentially. Another tip that's been pretty effective is sort of soft circling the first 25 or 30% of the funds you're going to need. Going to those first-degree connections, getting commitments from your immediate family and friends to invest specific amounts, so that on day one, when your campaign goes up on the internet, you've got 25% immediately collected. And that sort of creates momentum. And it's the psychology of not wanting to go onto an empty dance floor or into an empty restaurant. No one wants to be first. But if they see that you're already hitting that 25 or 30%, they'll be a lot more likely to invest in the company. And then, of course, there's creating a compelling campaign video. The product or service has to be well suited to a 3 or 4 minute video. So again, it eliminates some really complex solutions out there. It's well suited to consumer products and technology products that have mass appeal that people are going to be able to understand in 3 or 4 minutes on a video. And that video, again, really needs to be compelling, whether it's humorous or emotional or appeals to something that people are going to want to see it, and more importantly, they're going to want to repost it and send it around to their friends to gain some traction through that video. There's one some of you may have seen right now called The Coolest. Has anyone heard of The Coolest? It's great. It's a great video. It's perfect. It's a perfect crowdfunding campaign. The Coolest is a cooler, like the ice cooler you take on a picnic, except it has a built-in blender, it has LED lights, it has a waterproof speaker, USB ports, and it's this amazing device. And I think their target was something like $60,000 or $70,000, and the last time I checked, they had raised almost $8 million. Yeah, and the video, it's worth looking at. The video is very witty, and I mean, it's the classic build a better mousetrap. You know, it's a cooler. It's something we all have and have heard of. But they've made a really good one, and it's just created a buzz on the internet. And that model, again, is they're pre-selling. I think they're $250 or something. They've made maybe one prototype by the time they went live with their campaign, and then once they collect the funds from people, then they could go into production and start delivering the product. So it's a great model, rather than create all this inventory and then go out and try to figure out if there's going to be a market for your product. You could test your product in advance through this campaign. If no one had purchased it, well, they would have known that wasn't the right product at the right time. But so the campaign video is key, and the product that's suitable to being communicated through a campaign video is important. And picking a top-notch platform. Some platforms are better than others, particularly with an equity campaign. You want a platform that has a lot of ancillary services to keep you in compliance with relevant regulations. SeedInvest is a perfect example of a really well thought out platform, and that's why I think they've become one of the leaders in that industry, along with Kickstarter. So, any questions at this point? Yes?
What is credit-based?
Equity-based.
Yeah, equity-based. Sorry.
Equity-based and spread-based.
Well, credit-based. Yeah, I'm not sure. Credit-based, I mean, there are people. I'm sorry?
Like a convertible note?
Well, yeah, people are doing debt instruments. Yeah.
Yeah, it's a convertible note.
Convertible note. So people are creating various debt instruments. There are several, for example, commercial real estate crowdfunding platforms, and there are use cases around things like that. Yeah. Anything else?
I'm not sure if it was framed, but I wanted you to know that you may have noticed if you're going through the syllabus, we have a lot of theory, we've got cases, we've got mindset, and we have infrastructure. And so a lot of boot camps offer different types of infrastructure. The reason why we're taking this afternoon is to talk to you all about some of the infrastructure that we offer here at Cal. And the other part is that we want to make this experience as real as possible. So Robert's going to talk a little bit more about SeedInvest and why it's even applicable to you all right now.
Great.
Typing.
Absolutely. So SeedInvest, again, it's an equity platform. The founders of SeedInvest were involved from the very beginning with the Jobs Act for the last couple of years. They eventually want to do full crowdfunding to average citizens, but they're up and running now, and you could look at their site. They're doing deals for accredited investors and entrepreneurs, posting their campaigns on their site. And they're powering the Berkeley Bootcamp website. So I think, has anyone started posting their MVPs and team?
No one even knows what that is.
No one knows what it is yet. Okay. So the Bootcamp website, which you'll see here momentarily, is a place where you'll be able to post your financials, your concept, your minimum viable product, and investors will be given, I think, $1 million Berkeley bucks to invest in those companies that we find most compelling. So it's sort of it's a game, crowdfunding game, essentially investment game, but the platform is essentially based on the SeedInvest product that's up and live. And then they're collecting data from this game, which is going to be turned into Callnvest, which I mentioned, which I think is going to be an incredible tool, enabling alumni and people associated with Berkeley to go back and actually invest real dollars in Berkeley student businesses.
One of the benefits that you all have, I mean, you're basically our guinea pigs in our pilot in this, which is kind of cool because you'll see how it works and you'll be forced to use this website and think about how you want to be portrayed with your companies that you have on this website. But Kiran is actually on the phone, I think, so you can correct me if I'm wrong. But one of the great benefits is that normally with an equity-based or equity crowdfunding platform, you're also paying for getting on a monthly basis. But for a while, SeedInvest is kind of offering it to Cal teams at no monthly cost. So that's a true dollars and cents benefit too of this. Kiran, are you still there?
Yes, I'm here. Thanks for that. Yeah, so that's right. Thanks, Rob, and thanks, Vicky. Should I launch into kind of my presentation, or?
Yes.
You're on.
Kiran's the lawyer. And with that introduction, I'll let you go, Kiran.
Great. So, so do we have the presentation up?
Yep.
Okay. Yeah. So, thanks, Vicky, and thanks, Rob. I apologize. I couldn't be there in person. I did really want to, but it didn't work out. But this is almost as good. So, as Rob mentioned, SeedInvest has been around since shortly after the Jobs Act was passed. Rob's firm and his partners were, closely involved with SeedInvest when it was started. So we were founded in May 2012. Have now been in operation a little over 2 years. And as Rob pointed out, we are an equity crowdfunding platform. So basically, like Kickstarter, but people can get shares of stock. Companies can sort of raise from real investors. We are limited by the effective provisions of the Jobs Act. So again, as Rob mentioned, only a piece of the Jobs Act is in effect, which allows us to raise money only from accredited investors. We do intend and hope to take advantage of Title III of the Jobs Act when it's effective, which would allow regular people to invest and invest in much smaller amounts. So taking it to more of a Kickstarter plus type of model.
Kiran, what's the limit? What's the how much do you have to invest as a minimum right now?
So yeah, on SeedInvest right now, the companies can usually pick their minimums, but we have not seen much lower than $5,000 because it's companies still want to control how many shareholders they have, and there are just certain other regulatory aspects that make it difficult to go any lower than that right now. So you'll see minimums between $5,000 and $25,000 per investor typically at this point.
Kiran, I have timing is everything up. Tell me where you want me to start.
Yeah, so yeah, we can just start there. Basically, what we have in front of us here is our presentation that we show to companies when they're thinking about coming on SeedInvest. So it basically walks through things that companies need to think about before they start a fundraise like this or use a platform like us. I think here we have timing is everything. I think that kind of the thing to keep in mind is we are, I think, in one of the frothiest startup fundraising environments that we've seen since before the .com bust. And so, we are seeing sort of heavy activity both on sort of the angel investment front as well as the VC front. And so, now is, a great time to be out in the market and fundraising.
And so, Kiran, can you just, because we're looking at kind of nose-diving an opposite hockey puck or hockey stick chart, and with dollar amounts on the side. I just wasn't sure what that was conveying.
Yes, sorry. I mean, this is this is sort of talking about pre-2008. So it showed, sort of the build-up over time, and then it's kind of the nosedive in 2008. So I mean, I guess the takeaway is that raise money when you can, because you don't know what's going to happen next. So a lot of companies were raising in early 2008 and 2007, thinking that the market will just continue to go up, but the VC market in particular is very cyclical, and I think the takeaway here is sort of to strike while it's hot, and then also timing, not just sort of the market generally, but it's also sort of timing your company. So going out when you have a good story and you have kind of momentum lined up and initial traction. So nobody wants, as Rob said, nobody wants to be the first one in, and everybody wants to be sort of part of a big success story.
Do you think, Kiran, do you think that we could go to maybe kind of a Q&A, because it's getting later in the afternoon, just
Sure.
about SeedInvest? Would that be okay with you all? Do you think,
that's fine.
We'll try to move that way if you're okay with that?
Yeah, sounds great.
Do you all want to just ask some questions on what it is? Because Kiran hasn't said a lot about it or how old it is, and if we can do it that way, it'd be a little bit more interactive.
Sure.
Okay. So,
A gentleman with stripes on is asking a question, just to be your visual.
all right. So my question is, what percentage of a company's equity is usually funded through SeedInvest?
Did you hear that?
No, could you repeat the question?
Yes. What percent of a company's funding is usually funded through SeedInvest or equity crowdfunding?
Yeah, so I mean, I'll just use our own fundraise for an example. So, we raised about $4.1 million for our own Series A using our platform, and we basically lined up $2 million from sort of early stage venture capitalists, and then opened it up for people to sort of follow on. Right now, a lot of what's happening is, as Rob said, people are lining up the first 25 to 33% of their raise, sort of offline in the old-fashioned way, and then they're coming on to platforms like SeedInvest, and kind of using that initial traction to go get the rest. So one of the big points is not to just you can't just put your company up on a platform and expect the money to start flying in, because it doesn't really work like that. First, you do need to show traction and interest, and initial commitments, and then other people will start to take notice.
Which companies, I'm curious, have been most successful at using the SeedInvest platform? What types of companies? Not necessarily the names, but the industries or the types of products.
Yeah, so again, as Rob mentioned, it's things that people can easily understand. So consumer-facing products. We've had robotics companies that have been very successful, Internet of Things, virtual reality. So it's definitely things that people can understand quickly and get kind of excited about, and things that people can use. We've seen the Internet of Things be really successful because of that sort of real-world connection, whereas B2B software and some of the I guess more areas where you need more industry knowledge, or those are tougher sells.
Another question up front.
Okay, hi. How do the companies communicate with its investors, equity investors, when they are invested on SeedInvest, and how do the company communicate with those people?
So, do you mean on SeedInvest?
Yeah, I mean after your SeedInvest campaign, how do you communicate with your investors on SeedInvest?
So on an ongoing basis, once you've been funded by these people who funded you through SeedInvest, how do you communicate with the funders on an ongoing basis? Am I saying that correctly?
Yeah.
Yeah.
Yeah, so I mean, this is a traditional problem, or not problem, but I guess tasks for startups generally. So I don't think it's that much different than what startups should be doing now. It's sending quarterly updates. One of the things that we foresee happening, though hasn't really taken off yet, is companies who raise from a larger number of investors, finding ways to take advantage of that community of people who are now vested in the company. So facilitating the investors, retweeting the company's blog posts, passing on employment notices, things like that. But I think right now it's mostly sending those sort of quarterly updates, regular updates that companies should be doing already. Hasn't really. I guess the key point is you still don't have hundreds and hundreds of investors because you're still dealing with accredited investors. I think the highest number of investors we've had in any company has been, I think, 40.
Can you tell us for SeedInvest how much you all raised on your last round of funding and approximately how many investors you had?
So we raised about 4.1 million. Like I said, 2 million from kind of institutional VCs, and then another 2 million from I think 45 individual angel investors, and that's probably the largest sheer number of shareholders that we've seen so far.
Do you want? Should we move on and kind of take everybody through a demo of what it's like to get onto SeedInvest? You actually have to be. Normally, there is a process, a filtering process. Not everybody who goes on can go on, but we'll take one more question, and then, Kiran, would you be okay if we just went on the Berkeley Bootcamp site?
Yeah, that'd be great.
Okay, thank you. And how do you guys do the valuation for the companies? And how are those angel investors, how do you persuade the platform of SeedInvest persuade the angel investor to all agree on the same valuation?
Do you, Kiran, do you all have guidelines on how to do a valuation for a company? To what extent do you get involved in that or give guidance?
Yeah, so I mean it's a question we get pretty often, but we are not generally not allowed to advise the company on how to structure their offering in terms of the actual terms. So valuation is always kind of more of an art than a science. It's what people are willing to pay. So we tend to stay out of it. Though if we think the valuation is too high for anybody to be interested, then we probably wouldn't have that company on the platform. So I mean, I guess another data point is if you're most investors will look for somewhere between 20 and 33% of the company if you're talking about VC. So if you probably want to set your valuation accordingly depending on how much money you're raising. But the short answer is we won't tell you what your valuation should be, but if we think it's too high to gain any interest, then we'll probably let you know that.
So any other questions, and I'll kind of launch into what you all will be doing a little bit of tonight. Yep, one more question.
How does SeedInvest fit in with stuff like AngelList?
Did you hear that, Kiran?
Yeah. So that is another question we get a lot. So AngelList we think is it's great for the ecosystem. There are hundreds of thousands of companies on there, and there are thousands of other people on there. So we kind of view them. They're the big infrastructure player. Everybody's on there. When you come to SeedInvest, it's more of a focused fundraising sort of deal closing experience. So we may only have 5 to 10 companies on at a time, and they're on there to do their fundraise and close it and move on. And so we kind of act as an active partner in their fundraise. So once you kind of make it through a process, we'll actively identify investors for you to talk to. We'll go out and try to figure out where we should be spending time and identifying new investor prospects. So I would just say AngelList is more of kind of a passive platform, whereas we're sort of more of an active partner type of service. So that's where I would draw a distinction.
So, Kiran, as we go through this process, what I pulled up is a page that's berkeleybootcamp.seedinvest.com. And so this evening, I'm hoping that each of you will go in here. And the first thing, Kiran, if you want to walk me through, is how one signs in as a bootcamp participant, not an advisor or an investor, but as someone who's going to be putting their company on.
Yeah, so, we can walk through this. The basic concept is, we'll walk you through a wizard to populate what would become a SeedInvest, profile. So it's kind of all the things that, make up, what investors will be looking for. So there's sort of an initial walkthrough process, and then you can kind of add some bells and whistles once you've sort of completed the profile. But, to get started, you can go to berkeleybootcamp.seedinvest.com, and then you can click on this Are You an Entrepreneur button. Do you see that?
That's what you want me to click on? Okay.
Yes, so click on
You
Are
all
You an
are all
Entrepreneur?
entrepreneurs. Done?
And then you can also then click on Apply to Berkeley Bootcamp, right there in the middle.
Yep.
And so we'll basically walk through sort of, one of the things to keep in mind is, because these are securities offerings, there's a lot of regulatory aspects to this, and, one of which is kind of know your customer, or, basically we have to collect, information about the people that are kind of, doing offerings or investing in offerings. So here we'll basically have to create an account. So Vicki, you just want to type in a fake name and email address?
No. I'd like to type in, is it Tanner? Yes. Is that all right? I'm going to type in Tanner's. Sure. Is that all right? Is that going to screw things up if I use someone's actual email address?
No, that's perfect.
Tanner, come on up here. I want you to do it. Tanner's now typing.
Don't take this.
I don't think we can see your password. Oh, there we go.
I guess agree.
I agree, and whether or not you'd like updates or not.
Love updates. All right.
Okay, now he's registered.
Great. So now you should be on a page that says basic information, city of residence. So type in your city. You are interested in fundraising. You are likely a U.S. person, and if you are a student, you are likely not accredited. So click on those, and then click Continue at the bottom.
Okay, now it says start your company application. I'm starting a company application for. Oh, what?
Does this work for teams? You start
No.
so like I'm on Tanner's team.
Yeah.
Will it show up like, oh, Catalyst of Berkeley, I can join that, or am I gonna have to start like 5 Catalysts?
No. Kiran, the question is, once Tanner starts this, Catalyst at Berkeley, Josh, it's Josh, isn't it? Josh can then join the company's called Catalyst at Berkeley, and then Josh can join Catalyst at Berkeley. He doesn't have to recreate that account.
Yeah, so later in the process, you can invite the rest of your team to be a part of this company. Is that the question?
Yes. So let's say you have a logo, you don't need a logo. Do you want to come up with a fake micro blurb? You can always change this and edit this.
Sure.
Be creative. Nope, you don't have to be incorporated, right? Well, I don't know. Kiran, do you have to be incorporated? I don't know.
Well, if you were going through a real, SeedInvest profile, yes, you would have to be incorporated, but it's not going to enforce that here. So just as background, we do require, U.S. incorporated entity generally before you get onto SeedInvest.
So a lot of these things are starred, but my understanding is we don't have to complete them all, right?
Yeah, so the things that are starred will be sort of required to move forward. And, we probably, probably doesn't make sense to actually, you probably need to upload some things,
What
but
if
we
we
can.
don't have, not everybody's going to have a website or a company logo?
Well, I think, maybe they can just Google something relevant and put it on there.
What do you mean?
You can create something easy with Strikingly or Unbounce or any other MVP tools. You can create
Right.
It's easy to create a landing page. You can use that.
So that's what you
Well,
recommend is creating a landing page?
So yeah, I mean, I think it's fairly easy to generate some kind of logo as well as landing page. I think that is.
I'm not worried
I
about the
think that-
logo or the cover image, it's the website
Yeah.
I'm just a little concerned about. But we can go
Yeah,
back,
so-
we don't have to have it all now, right?
Correct.
Okay.
So you can kind of fill in what you can about these, save it, and then if you need to skip through some, then we can help you out.
Okay, we're going to skip through right now. We're going to hit submit and see what happens.
Sorry.
Okay, so it's forcing us to, we're testing this out right now. It's forcing us to do a company logo and things. But if we would keep on going, and let's say we put up some kind of a company logo, we're able to do it over the next 12 or 15 hours, then it has us go to the things that are at the top that are highlighted, like basic, story, fundraise, fact sheet, you, team, account, right?
Yeah, so you can actually, if you want to, we can look at this, but you can also just click on story, and you can see what those fields are. And if you want, I can sort of talk through each of these items if we have time. But
So one thing that I'm curious about as we're going through this is we won't always have, if we don't have all the information, we just have to fake it.
well, yeah, I think for this exercise, you can either fake it or I'm happy to if people want to sort of walk through some of this together with me. Happy to sort of do separate walkthroughs, but largely I would put something in there, and then once you complete your initial profile, you'll have access to the profile itself, which you can sort of further customize.
So we're just flipping through right now. We're on the fundraise.
Mhm.
Let's go, Tanner, just
Do you
keep
wanna go back
on
to story?
going through
Okay.
it.
Fact sheet.
Fact sheet. So you can use your imagination or not.
Sorry.
Yeah.
What type of? Can I ask what type of? Sorry, what type of corporations do you prefer, like LLC or C corp, or you have any preference about that?
So we at SeedInvest don't really have any preference. I think C corp versus LLC is kind of an age-old question. It kind of depends on what's important to you. If you think you'll have some pass-through losses that you can take advantage of, it may make sense to start as an LLC and then convert later. If you just want to do everything very simply and focus on your business, then C corp might be a better fit for you. But we can work with either.
So what I think is going to happen is that people are going to start filling these out tonight, and as much as people can, and then we're going to have questions about it.
Sure.
So our goal is to get things filled out in such a way that by Thursday at noon, people who are not in rooms to hear a demo from you could see something about your company and potentially invest. It won't be real money, but it'll kind of give you a feeling for how convincing you were in the pitch that you put online. With that in mind, Kiran, we'll have time to work on this in depth tomorrow afternoon, because people will be giving 2-minute elevator pitches, but those will be separate. So during a 3-hour span, you'll all have time to sit together with your teams, and tonight. But tomorrow, as of 3 o'clock, do you think you would be open to people calling you periodically to ask questions on filling this out?
Sure. Yeah. So we can just have the office hours format, and people can either email me or call me, or there will also be we can also bring in some of our team members to help as well as needed.
So what I meant to do when I took the stage from Robert, my to do this live from New York with Kiran, because he is live from New York. So the only thing I'm conscious of is that he is 3 hours ahead of us. So that would mean he would be, I'm asleep at 9, but Kiran, maybe you're not. But anyways, we'll be conscious of your time. But if you could kind of be available as we're trying to go through and use this platform, that would be fantastic.
Yeah, absolutely.
And you all should know at the same time that the speakers that have come in and who will be coming in have been asked to sign up onto this Berkeley Bootcamp platform as well, but as investors. And so you've got these two parallel paths running. And as you all start to get companies, let's see, Kiran, if we look at, which page do we go to see if there are any tiles up, for example?
So you would need to log in with probably an investor account.
Okay, I'm going to try to log in so you can see what the investors see. So I need to log out, I take it?
Yeah. So yeah, if you log in with your account, they can.
I know I have an old retro email. They're so old, they're new. Oh, it says my membership request is under review, which I don't think it is. Why would that be? Let's see if I can log in a different way then. Oh, isn't that funny? It's automatically putting me into a different account. Okay, Kiran, I'm going to ask you for your account. Maybe I shouldn't do that. Let's see if I can try a different one. Aha. So this is not that exciting when you're looking at it, but I had a company called Tigglytail, believe it or not. We're all entrepreneurs here. And so Tigglytail did backpacks and purses for women and kids, and we also gave books to children in need. So we did a little fashion, fun, and philanthropy. And so what happens is that investors will start to see tiles. Notice I didn't do my tagline. But they'll start to see tiles on the different companies. And I think we'll have somewhere between 15 and 20 new ventures that are starting or continuing here. And so these investors will see these different tiles and be able to click on them and get a little bit more information.
Hey, Vicki, if you want to go to SeedInvest.com, you can just show them what the tiles look like.
Thank you. Much better idea. There you go. So if you look, so this will also give you a good idea of what you might want to do, in the next 24 hours. But these I see 4 companies that are up right now.
Right.
And so when I look at those companies, they've raised anywhere from basically a little over $2.5 million down to $400,000. And you can see what they've raised on there. So as we're going through this game, you'll be able to see what the different companies do or don't raise. Any questions on playing this game? Or questions on SeedInvest? Yeah.
Should we have? There's a chart. Do we need to fill out write a balance sheet, fact sheet?
So there's a question on financials, which and whether we need to do a balance sheet to be able to do this, Kiran.
So you don't have to. Some companies will put financial projections in there. So once if you click on any of those companies that you're looking at, you'll see. Why don't you click on Diet Better?
All right, hold on. I just clicked on Heat Genie.
Or any of them is fine.
No, I'll go to the other one.
First one.
Thanks. There's Diet Better. Okay.
Yeah, so you'll see this is kind of what a complete company page would look like. If you scroll down, they've included sort of some highlights, overview, their offering terms, and then you'll get down to legal documents. And so there's a spot both there, and you can have a separate section as well to put sort of financials.
Yep.
So that could be sources and uses, cash flow, or projections. So you can put it in there, but it's not required.
Great, because unless you all are super far along, and are really good at making stuff up on the fly, we want to be able to fill that out. Yeah.
I'm not accredited to like an investor. I cannot see this profile, so.
If you're not an accredited investor, you can't. So in order to see this profile, anybody can, I mean, I just went in and can I see it? I think anybody can see the profile.
Yeah, so basically, these are 506C deals with general solicitation, so it's actually allowed for anybody to see it, but in order to invest, we would go through a heightened investor verification process where, we'll basically, check documents to make sure somebody's in fact accredited. So that is actually the new law that's effective under the Jobs Act allows that sort of public marketing aspect of it, but does come with it with this additional strings attached. So that's actually what sort of accredited investor crowdfunding is. It's the ability to market in mass to accredited investors.
What is accredited? Can you give us a definition?
Yeah, so, and this is kind of a hot topic as well, but the current definition is somebody that makes over $200,000 a year for the prior 2 years, or $300,000 a year jointly with their spouse, or has $1 million in net worth excluding their house. So that's somebody that the government thinks is capable of making their own financial decisions. That definition is currently under review, and we submitted some comments on that to the government as well.
So what's happening now is kind of we're going to shift gears, and you're going to have another crop coming in to do this. But as we have questions coming tomorrow, Kiran has office hours from 3 to 6, and I'm happy to try to answer any questions as they come up as well. But I want to thank Robert very much and Kiran for his time as we start in on this kind of real life game of equity crowdfunding. So thank you all. Thanks, Kiran.
Thank you.